President Donald Trump threatening those levies of 25% or more on semiconductor imports. So joining us now with more on this, we've got Maribel Lopez, the founder of Lopez Research. Maribel, it's great to have you on here. I want to talk specifically about the impact of these tariffs on some of these chips names in particular that drove the market to all-time highs early this week. Is the market missing something sinister when it comes to tariffs, or is the market right to kind of be sloughing off any potential negative impact?
This is really an opening volley by Trump to say he's really serious about tariffs. Tariffs will happen. The amount of the tariff and what the negotiation standpoint is still unknown. So this is like, hey, I'm throwing it out there. You're going to come to me. We're going to have a negotiation. And we're going to try to figure out how you are going to invest more in America. And that's really what I see as the statement that Trump is making here. This is why we're looking at April and not tomorrow. If we're looking at April, there's plenty of time for someone like TSMC to call and say, hey, here's how we're feeling about investing more in foundries in the US as an example. Same for Samsung and other companies that already build chips here, but not at a very significant standpoint.
Are there industries that you think are more likely to be successful making sure that they're included in an exemptions or an exclusions list as they try to vie for the ear and the mind of the president?
So some companies actually already have a strong foothold. You mentioned the automotive industry. If you look at somebody like BMW, they already manufacture a significant portion of what they sell in the US, upwards of about 50% in the US. So they actually have a better negotiating ability than, say, Samsung, who does manufacture some goods here, such as some of their home products, but not necessarily enough. So we're seeing that it is wildly unevenly distributed across the various companies and across the various sectors. But I think the call to action for everybody right now is to try to figure out what they can do to make a play to say that they're going to invest in America to either create manufacturing jobs, to create investment in some other type of category that we would consider as beneficial to the economy. And this is why the fund managers are not overreacting to the statement at this point, because they understand at this moment, it's still a negotiation.
So it sounds like you think the market is right to view this as that negotiation, not as something more serious. But do you think that the Trump administration is kind of angling towards universal tariffs by throwing out these larger numbers like a 25% to kick off those negotiations? And could there be risk associated with that?
I think they're incredibly serious about tariffs across the board. I think this is definitely a statement that says, no industry, no country will remain unscathed by tariffs, and that you have to have a plan on how to work with us. We are serious about rebalancing, whatever they think rebalancing means, but they have definitely indicated that they are serious about it. So the real thing to watch here, to your earlier point, is when do they come in effect? How long do we expect them to be in effect? And what would be considered a sufficient and necessary investment in the US? But clearly, there's many companies that are looking at this saying, if you're a auto manufacturer, say in Japan, if you are a semiconductor manufacturer in Taiwan, you're looking at what could this do to my profitability? How do I find a way to make sure that there's a sufficient investment that we don't end up with a 25% tariff, which is a significant number for any company's.
Maribel, almost a two-part question here. Number one, as you think about the companies that are kind of bracing for this and trying to figure out how to navigate around it, what does that mean in the near term for their innovation pipeline? Do they become a little bit more wary about how they can generate some of these cross-border business opportunities at the same time as they're making sure that they're investing further in an R&D pipeline? And then I guess on the other side of this, as they're thinking about their relations in other countries, how do they also need to strike a balance of saying, okay, yes, we agree with you, President Trump, but also going to other administrations elsewhere around the world where they're trying to operate and say, hey, we're hoping that you net out a good deal here too, as we're trying to operate in your region?
So I don't think this was unexpected. I think the issue, if you look in the semiconductor space, there's a tremendous amount of innovation that is not related to the actual manufacturing, which is really what, say companies like AMD and Qualcomm sell. And they're looking at companies like TSMC for manufacturing. Now the question is, how do we think about redistributing that? And is there a path where we can say we're not going to disrupt how we actually manufacture And we can still manage to migrate this forward into keeping the innovations that we're really good at, but leveraging the global economy. This, I think, is actually a very tricky balance. So we're looking closely at how fast, for example, you can build a foundry. Even if you wanted to move all your manufacturing to the US today, it is physically impossible. So there has to be some kind of negotiation on a global scale of where and how and what the timeline looks like. And so we've had the opening volley to say negotiations start now. We need to get a plan between now and April to make that happen.
Which specific chips names are insulated from the risks of those potential export controls and the tit for tat over tariffs, in your view?
Honestly, I don't see any chip company or any type of company at this point being fully insulated from a risk at this moment. This is one of these moments in history where you look back and you say, I need to make a plan.
Yeah, so that in mind, how are we thinking about the potential impacts to gross production as well here in the US? If we're talking about where some of these chip companies would anticipate they'll be able to generate purchase orders elsewhere around the world and then ship those chips, does that also institute some type of, or at least elicit some type of GDP impact from your evaluation?
So one of the things that we are concerned with is on a global scale, if we enforce tariffs, what kind of tariffs do we see on the other side? So there actually is global risk for how much product gets sold outside of the US, not just the consequences of inside the US. So we do foresee that there could be some slight stall. Now, I don't think that this is a long-standing thing. I'm firmly of the belief that this is still in negotiation play standard, but you have to be running scenarios that say, on the global standpoint, do I expect, for example, there to be a 10 or 20% decrease in China? Do I expect there to be a decrease in the European landscape? So that is actually on the table. So right now, everybody's sitting with their Excel spreadsheets, running numbers, trying to figure out how they make this happen, trying to actually figure out what should be their ask. I imagine it's going to be very busy at the White House between the whole global landscape and all of the US-based companies going to the White House trying to make a play for what they think is the right move. So these are the times when strategy is going to be created. There will be winners, there will be losers, but we absolutely think that there's going to be a shift in the dynamic of both how we see manufacturing happening, how we see the job landscape.
Let's talk about Nvidia, because we're gearing up for Nvidia earnings here, and it's going to be interesting to look at the market reaction, because there's this question of risk and whether the bigger risk is in AI earnings disappointing or in DeepSeek proving out their efficiency further. Which of those two do you think has the bigger potential risk for a company like Nvidia?
If you look at a company like Nvidia, they can actually sell every chip that they produce right now. The real risk upside for them is, can they produce enough to overperform what the market's expecting of them? The market has had incredibly high expectations for Nvidia every single quarter. They have blown it out of the park. At some point, we just see a stall, not even because of what Nvidia builds or because what's built in the landscape, but because of just the ability to assume these chips, build the data centers, have the AI services up and running. So I think we're headed for a disappointment on the AI landscape on multiple fronts. One of them just being sheer data center capacity, energy utilization, buyers buying actual AI services. There's a lag between building and buying, and we have not crossed that chasm at this point.
Maribel Lopez. Maribel, thanks so much for taking the time here this morning. Appreciate it.
Thank you.